This is a big one. The S&P 500 just dropped 1.2%. The NASDAQ got destroyed, down over 2%. Tesla crashed 14.5%. Alphabet collapsed 7%. And oil just hit $100 a barrel for the first time since May. The VIX spiked 12%. This was the worst day on Wall Street in weeks. And there are multiple forces converging at once. Welcome to Invest from Zero, your daily U.S. market wrap. It's Thursday, July 23rd, and today everything hit the fan. Houthi rebels attacked 2 Saudi oil tankers in the Red Sea, sending Brent crude above $100. Alphabet's massive capex hike spooked investors about AI spending sustainability. Tesla's earnings miss on the bottom line erased $70 billion in market value in a single session. And initial jobless claims dropped to 187,000, the lowest since 1969, which sounds great, but actually makes rate cuts less likely. Here's what's coming up. S&P 500 deep dive, NASDAQ and Dow, all 11 sectors, the biggest movers, stock of the day Tesla, macro dashboard, and what to watch tomorrow. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,408.30. That's lower by 1.21%, or roughly 91 points on the day. Yesterday's close was 7,498.96. A 91-point drop is massive. To put that in perspective, the S&P averaged 10 to 30-point daily moves earlier this week. Today was 3 to 9 times that. Sellers were in control from the opening bell and never let up. The selling pressure came from 3 directions simultaneously. First, the Alphabet and Tesla earnings aftermath. Both stocks reported after the bell yesterday, and both are getting punished today. Second, oil hitting $100, which reignites inflation fears and threatens consumer spending. Third, the 10-year Treasury yield pushing to 4.7%, its highest level in 18 months. Higher yields mean higher borrowing costs for companies and consumers. For the week, the S&P is now down about 0.7%, but it feels much worse because today's decline was so concentrated and violent. 7 of 11 sectors closed red. Only defensive pockets of the market held up. Now let's move to the other 2 major indices. The NASDAQ Composite got hammered, losing 2.15%, or 553 points, closing at 25,138. This is the worst day for the NASDAQ in over a month. The damage was led by 2 magnificent 7 names. Tesla crashed 14.5%, erasing roughly $70 billion in market cap. Alphabet collapsed over 7% after raising its capex guidance to $195 to $205 billion. But the damage didn't stop there. Amazon dropped 4.6%, Oracle lost 4.6%, and Salesforce fell another 3.7%. That's now 3 consecutive days of selling for Salesforce. When you see this many mega-cap names down this hard on the same day, it tells you this isn't stock-specific. It's a broad repricing of growth expectations. Moving to the Dow Jones Industrial Average, it lost 507 points, or 0.97%, closing at 51,712. The Dow held up better because it has more exposure to industrials and healthcare, which were actually green today. Merck, Eli Lilly, Johnson & Johnson, and ABBV all finished higher. These are the kinds of stocks investors run to when they're scared. And today, they were very scared. Now let's get into the sector breakdown. This paints a brutal picture. Only 4 of 11 sectors finished green. 7 were red. And the spread between best and worst is a staggering 6.3 percentage points. Leading the market, industrials up 1.73%. Industrial stocks actually rallied as defense, spending, and infrastructure continue to benefit from the geopolitical environment. Healthcare gained 1.26%, classic flight to safety with pharma giants Merck, Eli Lilly, and ABBV all catching bids. Utilities rose 0.5%, and energy barely held positive at plus 0.30. Now look at the carnage. Technology fell 1%. Materials dropped 1%. Consumer staples, usually a safe haven, fell 1.4%, which tells you even defensive trades got caught in the crossfire. Communication services collapsed 3.5%, almost entirely because of Alphabet's 7% nosedive. And consumer discretionary was absolutely destroyed, down 4.6%, the worst sector by far. Tesla's 14% crash dragged the entire sector down single-handedly. A 6.3-point spread between the best and worst sector is extreme. This isn't rotation. This is panic selling in growth names while money runs to safety. Now let's look at today's biggest movers. On a day this ugly, the gainers tell you just as much as the losers. The number one gainer, Merck, up 2.36% to $130.48. Pharma is the classic defensive trade. When a market panics, investors flock to companies with stable cash flows and dividend yields. Merck fits that profile perfectly. On a day when the S&P dropped over 1%, making money in Merck means institutional investors were actively rotating into safety. Rounding out the top 5 gainers. Number 2, Eli Lilly, up 2% to $1,185.87. Lilly continues to benefit from GLP-1 drug demand and is the ultimate defensive growth play right now. Number 3, Exxon, up 1.6% to $156.89. When oil hits $100, Exxon wins. Simple as that. Number 4, ABBV, up 1.4% to $256.92. Number 5, J&J, up 1.4% to $259.27. Look at this list. Merck, Eli Lilly, Exxon, ABBV, Yeti. 3 pharma names, 1 energy name, and 0 tech names. On a day when a NASDAQ dropped over 2%, the winners are the most boring, defensive stocks in the market. That tells you everything about investor sentiment right now. Now, let's flip to the losers. And buckle up because this is ugly. Tesla, ticker Tesla, crashed 14.52% to $319.69. 14.5% in a single day. This is one of the largest single-day drops for Tesla since 2022. The catalyst was clear. Adjusted earnings per share came in at just 33 cents versus 51 cents expected. Revenue beat at $28.24 billion, and deliveries of 480,000 vehicles were strong. But CEO Elon Musk called this a massive CapEx year, with spending on Optimus robots, robot access, and data centers eating into profitability. Investors are losing patience with the spend now, profit later narrative. The rest of today's biggest decliners. Alphabet dropped 7.1% to $317.69. Despite beating revenue expectations at $119.8 billion and growing cloud revenue 82%, the CapEx hike to $200 billion was too much for investors. CFO Anat Ashkenazi said they're still supply constrained, meaning they want to spend even more. The market heard that and said no thank you. Oracle dropped 4.6% to $120.04. Amazon dropped 4.6% to $233.66. Amazon reports earnings next week, and investors are bracing for another big CapEx number. Salesforce dropped 3.7% to $156.93. That is now 3 consecutive days of selling for Salesforce, totaling a decline of nearly 10% in just 3 sessions. The average decline among our bottom 5 today is 6.9%. That's not a normal day. When the average loser in the megacap space drops nearly 7%, you know fear is driving decisions, not fundamentals. Time for our Stock of the Day segment. Today it's Tesla, ticker Tesla. Let's put this crash under the microscope. Tesla dropped 14.5% today, closing at $319.69. That's the 30-day low. Over the last month, the stock has ranged from today's close at $319 all the way up to $425.30. That's a 33% trading range, and today we hit the absolute bottom of it. Let me give you the full picture on these earnings. Revenue came in at $28.24 billion, beating estimates of $25.71 billion. Deliveries hit 480,126 vehicles, up 25% year over year. Those are strong operational numbers. But adjusted earnings per share were just 33 cents versus 51 cents expected. That's a 35% miss on the bottom line. Where did the money go? Elon Musk said this is a massive capex year. Tesla is pouring money into Optimus humanoid robots, robotaxi development, and AI data centers. Sound familiar? Just like Alphabet, just like Meta, just like Microsoft, the biggest companies in the world are all spending hundreds of billions on AI, and the market is starting to revolt. The question for Tesla specifically is whether investors still trust the vision. The stock has now fallen 25% from its 30-day high. That is correction territory for one of the most watched stocks in the world. Now let's pull up the macro dashboard. And today, it's flashing red across the board. The VIX surged 12.4% to 18.7. A 12% jump in the fear index in a single session is a major warning sign. We went from 16.6 yesterday to 18.7 today. If the VIX pushes above 20 tomorrow, that puts us into elevated fear territory and could trigger systematic selling for volatility targeting funds. The 10-year Treasury yield climbed to 4.7%, the highest in 18 months. Here's why that matters so much right now. Initial jobless claims came in at 187,000 today, the lowest since 1969. That sounds like great news for the economy, but it's terrible news for anyone hoping for rate cuts. A hot labor market plus $100 oil equals sticky inflation. The Fed has no reason to cut rates in this environment. Now let's talk about the elephant in the room. Oil. WTI crude exploded 6.2% to $92.18. Brent crude crossed $100 a barrel, settling at $100.69, up about 7%. The catalyst was devastating. Houthi rebels in Yemen attacked two Saudi oil tankers in the Red Sea, the Ancelia and the Layla, causing a fire on one vessel. The Houthis have declared a naval blockade on Saudi shipments through the Bab el-Mandeb Strait. Oil prices are now up over 30% this month alone. President Trump said the U.S. would hold Iran responsible for any future Houthi attacks. Gold actually fell 2.3% to $4,052 today, which might seem counterintuitive on a risk-off day. But gold often sells off when yields spike sharply because higher rates increase the opportunity cost of holding a non-yielding asset. The macro picture is the most alarming it's been all year. Rising oil, rising yields, hot labor market, and collapsing tech earnings confidence. This is a dangerous cocktail. All right, let's close out with my watch list for tomorrow. These are critical. Number 1, oil above $100. If Brent stays above 100 into tomorrow, expect more selling in growth stocks and more buying in energy names. Watch overnight futures closely. Any further escalation in the Red Sea or with Iran could send oil toward 110, which would be a crisis level for the global economy. Number 2, the VIX at 18.7 and climbing. If we break above 20 tomorrow, that's a major technical level that could trigger automated selling programs. The last time the VIX sustained above 20 was back in April. Tomorrow's opening 30 minutes will tell us whether this is a one-day panic or the start of a deeper correction. Number 3, Microsoft reports earnings next week. After Alphabet raised CAPEX to $200 billion and the market punished it, Microsoft's CAPEX guidance will be the next big test of AI spending sentiment. If Microsoft also raises spending, the entire AI trade could face a serious repricing. This is a fragile market right now. Protect your positions, manage your risk, and don't try to be a hero. And that is your complete U.S. market wrap for Thursday, July 23rd. Today we covered the S&P 500, the NASDAQ, and the Dow Jones. We broke down all 11 sectors, went through the biggest movers both up and down, gave our stock of the day Tesla a full 30-day chart review, checked the macro dashboard with VIX, bonds, gold, and oil, and finished with 3 things to watch for tomorrow's session. If you found this valuable, please hit that subscribe button. Turn on the notification bell so you get these episodes every single trading day. Share this with someone who's trying to learn about the markets. Drop a comment below and let me know, are you bullish or bearish heading into tomorrow? I read every single comment and try to respond to as many as I can. Remember, nothing in this video is financial advice. I'm just sharing data, analysis, and my perspective. Always do your own research or consult a licensed financial advisor before making investment decisions. I'll be back tomorrow with another full breakdown. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.